Hello everyone. Today let's come back to a recent example of creativity with Anglo American and the first sustainability-linked bond, SLB, that addresses criteria related to employment. For the record, SLBs, unlike green and social bonds, are not linked to specific projects. Here, the issuer sets itself measurable sustainability objectives and is exposed to paying penalties if they are not achieved. Anglo American, one of the major mining companies, has set 3 targets to be met by 2030. A 30% reduction in scope 1 and 2 carbon emissions, a 50% reduction in clean water consumption in areas of scarcity, and support so for that every job on site there are 5 jobs off site. The ambition here is to support local communities in countries where Anglo operates in order to bring stability and integration. The penalty for not meeting the target seems severe, 40 basis points per year per target, so a total of 1.2% of coupon increase in September 31 for a bond maturing in September 32. In other words, this seemingly generous penalty is in line with market practice because usually SLBs offer a lower premium, 25 basis points per target, but for a longer period. Anglo explained that they wanted to impose a significant penalty on themselves, but given the nature of the targets, these will not be measured until 2030, shortly before the bond matures. So this time frame was also used as an argument to respond to investors disappointed by the lack of commitment to Scope 3. Scope 3 measures other indirect emissions and represents 90% of Anglo's total emissions. Said differently, Anglo American is committed to reducing by 30% the 10% of its carbon emission. Put like that, the announcement effect loses, of course, its emphasis. So as far as Scope 3 is concerned, the company has ambitions minus 50%, but by 2040, the target is beyond the maturity of the bond. So Anglo could explain why no Scope 3 target is included. So what did investors think? On a purely financial level, the 250 basis points premium initially offered attracted 2.5 billion euros of interest. Given the success, the conditions were tightened to 223 basis points, which caused an outflow of 400 million from the order books. Still, the bond held up well. However, 1 week after its issue, the premium was reduced to 213 basis points, which is still 18 basis points beyond conventional Anglo bonds. So what does this story tell us? That there's a certain schizophrenia that is necessary for investors who want to fund sustainability while making personal profits. Companies in the transition sectors like mining and energies have understood this and will continue to make creative efforts to attract investors who are more sensitive to figures than letters. Thank you.